All right. Okay. So basically tonight I will be sharing about the fundamental structure, okay, and also the marketing plan as well. All right. And I will also go through with the procedure on how to check, okay, check about the LP lock, okay, check about the token contract open source. Yeah, I will go through everything. All right. So this whole moment, let me share my screen. All right. Can you guys see my screen? Okay, my connection is not that good, yeah. My Wi-Fi connection is not that strong over here. So later if my voice, if you guys couldn't listen to my voice or my voice is breaking, please let me know. All right. Okay. All right. So first of all, I will be sharing about the 5 core question of V3. All right. So what is V3 actually? Uh, for this protocol, yeah, actually we are doing DeFi, yeah. So DeFi, we have many of concept. Okay, so the concept that we are doing is about DCR, decentralized currency reserve protocol. Okay, so in DCR, there is version 1, version 2, and version 3. Okay, so I'll be sharing about the elements of version 3, and I will make a comparison between version 3 and also version 1. Okay, in my slides. All right, so these 5 core questions is the question that, okay, how do you determine a DeFi project is worth to join? Okay, so these are the standard that we are looking for when we are choosing a DeFi project. So what are these questions? All right, so the first 3 questions, we are talking about the security of this project. Okay, is it everything, all the data, okay, included our assets, okay, included the token holders, everything is it transparent? Because for the fundamental elements of DeFi is decentralized, correct? So which means that in decentralized project, we can check everything because everything is transparent. Yeah, there's no backdoor for the company. Okay, everything is run by the contract. Yeah, so this is what we say the highlight of DeFi. Yeah, so this is the security that we are talking about. So, and the last 2 questions, okay, we are talking about the sustainability of this project. Okay, so what kind of mechanism is it? Okay, what kind of mechanism they are using, okay, to control the bubble, okay, to control the token supply and also to stable the token price. Yeah, so is the mechanism run by contract or is it controlled by the project itself? Yeah, these are the questions we will be talking about. All right. So the first question, okay, is about the LP lock. Yeah, LP means that the liquidity pool. Okay, why LP lock is so important for investors, for the users? Okay, because LP is where we make deposit and also withdrawal. All right, where you swap your token to USDT or your USDT to the token. Yeah, so in liquidity pool, okay, our assets is all in there. So we have to make sure that the LP is locked so that the project, they couldn't run the pools. All right. Yeah, this is the first question. And the second question, we will be talking about the token contract open source. Okay, so if the contract is open source, okay, we can check from the coding, okay, by what mechanism, algorithm, or by what method, okay, the contract issue the token. All right, because for example, Dogecoin or Ethereum, okay, this type of token, they don't have a maximum supply. Okay, they don't have a fixed total supply because it will always based on the USDT and the token will be minted. All right, so we have to know the mechanism. Okay, like for example, okay, right now deposit how many USDT and it will mean how many token. Yeah, this is what we say the mechanism. So this mechanism we have to check from the contract, from the coding. Yeah, so open source is very important. Okay, because if the token, okay, is oversupply, okay, it's not well controlled, which means that the token value will keep dropping. Okay, yeah, this is the second question. So the third question is talking about the treasury. Okay, because for this business model, okay, the asset is not only in LP, but also in treasury. Okay, all right. So we need to check whether the treasury is managed by the company, the project, or is it managed by every one of us, by the community. Yeah, so we need to check whether this treasury, okay, they have the multi-sig mechanism and governance mechanism. All right, these are the first three questions. And the last two questions, question number 4 and question number 5, we'll be talking about the sustainability. Okay, by what mechanism, okay, they produce the token, or the token is controlled by what? Okay, the value of token. How does they stabilize the token price? Yeah, so we are talking about the EM emission module and also RBS reserve-based stabilizer. All right. So for the first question, okay, is the LP lock. All right. So just as I mentioned, okay, LP lock is very important, okay, to prevent projects from rugging the pools. All right. So where can we check the LP lock? Okay, we can check from ave.ai, okay, or Dex Screener or Blockchain Explorer. Okay, so let me show you how to check. Yeah. All right. You guys can see my screen, right? Okay. So this is the Dex Screener platform. Okay, I used to check the LP. Okay, you can use AVE as well. All right. So from here, the token I'm showing you right now is the token of origin, LGNS, longinus. All right. So this is the page, okay, you will see after you insert the token name or the token address, right? This is all the data. So you scroll down, all right, and you will see this liquidity providers, okay, liquidity providers. Okay, so you can see this is their LP, okay. So none of the LP is locked. Yeah, from here, none of the LP is locked. This is the token of origin, LGNS. Yes. So as you can see, 99.99% of the LP is not locked. All right. So I will be showing you, okay, another token which is fully locked. All right. So this is the second token, okay, SKYAI. So this token is basically is doing about AI, okay, AI ecosystem and also payment system. All right. So same as well, go to the liquidity providers LP. All right. From here you can see, okay, this is 100% locked. Can see from where you see this one is 0 times 0x000, which means this is the black hole. Okay, black hole lock. Okay, black hole lock means that permanently locked. So you will see here mentioned dead. Okay, this is dead pool, black hole pool. So already locked for 100%. Yeah, so there's two types of lock. Yeah, one is duration lock and another is black hole lock. So the lock that we are looking for, fully permanently locked, is the black hole lock. All right, which is this one. Okay, so different platform, it will show in different ways. For AVE, okay, AVE will mention, okay, there's a black hole, okay, at the end of the wallet address. Yeah, that one is black hole lock. So for Dex Screener, it won't show the black hole, okay, it will show like this debt, okay, because this is the address, okay, the contract address for the black hole. Okay, the contract for address for the black hole is 0x000. Okay, there will be no numbers for the black hole. All right, so for here, okay, you can see already locked 100%. All right, this is SKYAI. So that's why you can see from the chart, okay, the chart is very healthy. Okay, the chart pattern is very healthy, as you can see, okay, because investor, they are confident in persist this token because the LP is fully locked. All right. Okay, so for another part, sorry, for the third one, yeah, this one is about ARKs. Yeah, ARKs also got locked. Okay, we can check. Wait, yeah, the connection is a bit slow. Right, so we go to LP. Yes. Okay, as you can see from here, yeah, this one is black hole lock. So ARKs lock around 87.65%, okay, of the LP. Yeah, so from here we can see that ARKs also got locked. All right. Yeah, so this is how you check whether the LP is locked. Okay, so we proceed to another questions. Okay. All right. For another questions is about the token contract open source. All right. So this one just I mentioned about the importance of this part. Yeah, because the token contract is not open source, we couldn't check the mechanism. Okay, the token supply is minted. Okay, the token is produced by what mechanism? Yeah, this is very horrible. Okay, if the token contract didn't open source, because which means that if the token contract didn't open source the project, they will have the authority to mint the token from time to time. All right. So what sometimes you will see like some token, okay, their community is doing very good. Okay, the community is very hard, it is very high, but how come the token value couldn't increase? Yeah, one of the reason is because of their token produce, okay, the authority to produce the token is still holding by the projects. Yeah, they can produce the token, okay, anytime they want. Okay, so when the total supply is become more, which means that the value will become lesser, correct? Because the supply is more than the demand. Yeah, so this is one of the what effect that will cause to the market. And another thing is, okay, once you have the token, okay, for example, let's say the LP pool right now, okay, there's maybe 500 million, all right, but the LP is already locked. Okay, you go to ABE, you go to desk screener check, the LP is already locked. But then as long as the token contract is not open source, the project is still holding the authority to mint the token. Yeah, so anytime, okay, they can produce another 100 million token or maybe 1 billion token. Yeah, in 1 second or maybe in a few seconds. So once the projects have they own so much token, so many tokens, okay, they can use the token to swap the USDT in the LP pool, even though the LP is locked. Yeah, so when this kind of thing happens, which means that all the assets in LP will be swapped by the projects and the token that we are holding will become totally no value. Yeah, this is the second things that will cause to the market. So the token contract, okay, is very important to open source. And this is what we say for a DeFi project, this is a very basic thing, okay, to open source your token contract. Right? So for this part, how can we check? Let me show you. Okay, close this one first. Right. So this is the token longiness, GNS. Okay, this is Polygon scam. All right, after you insert the token address, then it will appear, it will show this page. So first thing, okay, originally, okay, after you access to this link, so it will be show transaction. You have to click contract. All right. Yeah. Here we'll show you the contract source code verified, which means that the source code is open source. All right. So we need to check from the coding. Okay. Bottom here, you can see all the coding. Yeah. So for this coding, I believe if we are not a programmer, yeah, we for sure we couldn't understand, okay, what this is trying to what is trying to say, right? So there's a another way, okay, to assist us in analyze this coding. Okay, we can use ChatGPT. All right, use ChatGPT.
Yes, screen is freezed. Daniel, your screen is freezed.
Hold on, wait, okay, let me share again. All right, can you guys see it now? All right, okay. Yeah, so I repeat again. Yeah, this is the what we polygon scan. Okay, we are checking the token of origin, LGNS. All right. So after you visit Blockchain Explorer, okay, you scroll down, okay, you will see a contract, okay, you click it, and here it will show, okay, if the contract is open source, okay, you will see a green color tick right here. All right, so if the contract is not open source, you won't see anything, okay, you won't even see the contract, this button for you to click as well, if the contract is not open source. All right. So if the contract is open source, okay, well, bottom here you can see there's different contract. Okay. So we can copy paste the source code. Okay. For example, this one. Okay, we press here. Okay, there's a copy here. Okay, copy source code, click it, and then you go to ChatGPT. All right, and then you paste it. Okay. Yeah, these are the contract, and then you just press, please help me to analyze the risk of this source code. Yeah, wait a moment. So ChatGPT later, it will summarize for you, okay, what is the risk in this source code, okay, and it will give you a conclusion. Yeah. Connection is not that good. Never mind. We wait for a moment because the ChatGPT is still analyzing. Okay. Yeah. Yes. Okay. You can see from here. Okay. This is the token of LGNS. Yeah. Fee lottery. Yes. This is the most important part. Okay, so others is talking about the mechanism. Okay, by what kind of mechanism they are using to set the token. Okay, for example, the fee, the gas fee, okay, the tax, everything. Yeah, it will show here. But if you found this one, okay, this is what we say the horrible parts. Because if the project is still holding the admin role, which means that this project is still considered as centralized project. Yeah, because as long as they are holding the admin role, they're still holding the authority to mint the token. Okay, to mint the token, or they still have the authority to remove the assets. All right. Yeah, so we have to look, okay, the admin role is get readed, okay, it's thrown away. Okay, yes, this is the admin role. The admin role, which means that you're still holding the power to control the, obviously, the mechanism. All right. Yeah. So because for decentralized project, okay, for DeFi, you doesn't need the admin role because everything, okay, is set in the smart contract. Okay. So when the project started, okay, everything, the mechanism, the algorithm is automatically operated by the smart contract. Okay. So we no need to hold the admin role. Yeah. So from here, you will see that this is a centralized, okay, very centralized. Yeah. Right. Can see. Okay. Deployer controls minting rights indefinitely. All right. So what is the effect? What is this will cause to us, cause the market? Just now I already explained. Yeah, they can mint the token anytime they want. Yeah. So once they got the token, okay, they can swap everything, swap the token. They can swap the USDT in the LP anytime they want. Yeah, so this is the backdoor I mentioned. Okay, this is the backdoor. So usually you will always find this issue in V1, version 1 project. Yes, they always leave a backdoor for them. So in order, okay, maybe the end of the day, okay, they can use this mechanism, okay, to wrap all the pools. Yeah, either they didn't lock the LP, or maybe they're still holding the authority of the admin role. Yeah, they always have a backdoor. So we need to check properly, okay, um, in their coding. All right. Yes. Yeah, you see high risk. Okay, high risk, centralized control over minting and fee system. Okay, possible rug. Yeah. Okay, so maybe you are investing in different projects. Okay, you can also use this method. Okay. Hello, hello. Please don't please don't write in the screen. Yeah. Yeah, thanks. All right. Yeah, can you please remove it? Thank you. Okay.
Dan, just stop sharing screen and then turn off the a note, and that they won't be able to write.
Okay. Okay, so this is for the second question about the token contract. All right. So for the third questions, we'll be talking about the treasury. Can you guys can see my screen, right?
Yes, yes, we
Okay.
can.
All right. Yeah. So for the third question, okay, we are talking about the treasury. Okay. Treasury, what we say, the concept of treasury is not in every DeFi projects. Okay, it's only for the protocol of decentralized currency reserve. Okay, the concept is almost similar like the function of central bank, or what we say Federal Reserve. So that's why there's a treasury concept in this DeFi projects. Okay, so treasury mainly is to use to reserve the assets. Okay, in case like in future company projects need to develop the program or develop the community. Okay, for example, set up offices. Okay, organize an event. Yeah, so the money, the expenses that come from is from treasury. All right. So that's why we need to check whether this treasury, okay, is it managed by the project itself, or is it managed by the community, by everyone of us? So how do we check? Right? We need to check whether they have the mechanism of governance, which is the DAO, DAO community, okay, worked by the community, plus the multi-signature mechanism. All right. So mainly for these two parts, you can understand it as a two-step verification. Okay, so we can check from the Safe Global. Okay, safeglobal.app. Yeah, later I'll be showing you. So from here, you can see that, for example, okay, if the company they want to use the asset, okay, in the treasury, okay, they have to be approved by the community. All right. Every token holders, okay, we have the right to vote Okay, we have the right to vote, approve, or we agree or disagree this proposal. Okay, let's say, for example, maybe next month we are going to organize an event in Dubai. All right. Yeah, so let's we initiate the proposals, then start for voting. Okay, usually you can see from here, okay, usually it will take around 3 to 5 days for voting. All right. So as long as there's more than 60% support, okay, then this proposal will sync to blockchain. Okay, so the voting will based on the volume of the token you are holding and also the duration, okay, the duration of token holding. Okay, based on these two elements, okay, it will decide the power of your vote. All right, so after more than 60% support, then it will sync to blockchain. And then from blockchain, it will randomly choose maybe 7%, okay, from this out of this 60%. All right, okay, for example, 7%, then as long as there is 4%, okay, successfully sign, okay, sign the proposal, then this proposal will be initiated. All right, then only the company, only the projects, they can use the asset in treasury. Okay, go for organize an event in Dubai. All right, yeah, so these are the procedures, okay, through voting and also multi-signature. So let me show you again, okay, for this part. Right. Right, so this is the a third-party platform, okay, app Safe Global. Yeah, so this is the homepage of this website, right? So you doesn't need to connect your wallet. Okay, is you just want to check, you don't have to connect your wallet. You press watch any account. All right, and you can insert the token address. Okay, the token address that I'm using is from Ethereum Foundation. Okay, this contract address. Okay, so because I'm using Ethereum Foundation, yeah, so I'm choosing Ethereum network. Yeah, here got different type of network. Okay, you can choose, right? Choose the network Ethereum. And then for the name, okay, you can insert any numbers or any alphabet, maybe A, B, C, or 1, 2, 3 also can. Okay, and then you fill in the wallet address. Yeah. So if this token address, okay, they have the multi-signature mechanism. So here will appear the next button for you to click. Okay, if the token address, okay, it doesn't have the multi-signature mechanism, okay, it will appear like this. Okay, the bracket will become red color and it won't appear the next button. Okay, yeah. So press next. Okay, so from here you can see that these are the wallet address that chosen by the blockchain, okay, for the multi-signature. All right, then we press next again. Yes. Okay, so you can see, okay, for Ethereum foundation, okay, for this proposal, okay, it only requires 5 signers. Okay, some of the token it will require 7 or 6 signers. So as long as it's more than 2/4 okay, sign in here, then this proposal will be successfully initiated. Okay, for here is 3 out of 5. Okay, 3 out of 5, which means in this 5 contract address, in this 5 wallet address, as long as there's 3 wallet address successfully signed, okay, then this proposal will be initiated. All right, so this is how you check whether this project is multi-signature. Okay, you got the mechanism of multi-signature. So what this is important because when we say a truly DeFi projects, yeah, it must be this way, in this way. Because the DeFi project we're talking about is totally decentralized, transparent, and every decision making, okay, about the policy, about the use of asset, okay, have to be vote, okay, have to be agreed by the community. Only we can proceed. Yeah, so this is how the DAO works. All right. Okay. Yes. All right. So this three questions. Okay, we are talking about the safety of our assets. All right. About the assets in LP and also the assets in treasury, and also how we can check. Okay, all the transfer data. Okay, all the transactions. Okay, transfer to where also we can check everything. All right. So, and the last two question, okay, is about the sustainability, okay, about the structure, okay, how the structure, how the mechanism control the bubble so that the platform can last longer. All right. So, as everyone know, okay, in financial industry, okay, there are always got bubbles. Okay, as long as you have marketing plan, okay, you have what we say passive income, uh, there are always bubbles. So the important part is how do you control the bubbles? How do you sustain the bubbles in order to last longer? Correct. Yeah. So we need to understand the core structure of DeFi first. Okay. So for DeFi, okay, as you can see here, okay, we compare to the previous Web2 project, right? The traditional Web2. Okay. For example, like the previous project, okay, like last time, not last time lah, like the Web2 project, we joined before, for example, Forex, okay, or maybe a split program. Yeah, these are all Web2 programs. Okay, so you will see like these kind of projects, okay, they are very rely on the founders and the community hype, right? That's why a lot of what you say marketers, a lot of investors, okay, when they decide to join a platform, when they decide to invest in a platform, usually they will ask who is the boss, okay, who is the founders of this company, of this project. Okay, I want to know his background. So I want to know what he's thinking. Yeah, because the founders, okay, they have the 100% rights, okay, they have the 100% power to control every policy of this company, okay, how the development of this company. So it's very important for the investor to know, okay, what is the thinking, what is the planning of the founders, right? And yeah, the most important part is what kind of support the company can give me. Yeah, so this is very rely on the founders. All right. Yeah, this is the what we say the core structure of the traditional Web 2. And for DeFi protocols right now, okay, DeFi is not under Web 2, DeFi is Web 3. All right. So in DeFi, okay, it is totally different from Web 2. Okay, because in DeFi, as I mentioned just now, okay, it's totally decentralized. Okay, and the company, the projects no longer having the authority to control the projects. Okay, everything have to be approved, have to decide by the committee, only it can be done. All right, so from here you will know this concept is what we call the concept of strong product. Okay, witness the project, witness the founders. Okay, so what does it mean? Let me give you three examples. Okay, as you can see here, okay, Uniswap. Okay, the token called as UNI. Okay, I believe most of you guys heard of it. Yeah, this is the Uniswap is the what we say the leading, okay, the top tier decentralized exchange. Yeah, okay, and also AAVE. AAVE is the top tier lending and borrowing infrastructure, okay, as well as the YFI, okay, is the top tier liquidity mining protocols. Yeah, so these are all under DeFi projects. Okay, they have the same, what we say, um the similar part, okay, which is you very less people, okay, most of the people, we don't know who created that, right? Who is their founders? Okay, who is their back-end team? Okay, the management team, the technical team, who are them? We don't know. But this token is very popular. Okay, we can see this token in everywhere. Okay, every central exchange you will see this token. Uniswap, AV, YFI, okay, they are doing different protocols, solving different problems. Okay, the market value is very high, a lot of token holders. But who created this? Yeah, this is what you say. This is very this is the interesting part in DeFi. Okay, because in DeFi, you doesn't know that the background of the token, okay, or the background of the company, the team that created this. Because in DeFi, we will say that, hey, this token is come from where? Come from which country? Is it from USA or from Malaysia or from China? No, no people will ask about that because as we say, blockchain is everywhere. Okay, it's everywhere. All right. So this is what we say the concept of DeFi, strong product, okay, and weakness the founders. Okay, you will see that most of the investor, most of the users, player, okay, when we are determine, okay, whether a token is good or not, is a potential or not, worth to buy or not, we always look at what? We always look at the white paper, right? Okay, what is the ecosystem? Okay, this protocol, okay, their purpose is to solve what issue. Yeah, all these things, the token holders, the LP, okay, is there's a lot of people, user holding this token. Yeah, this is all the data we are looking, but not the background. All right. Yeah, this is what we say the core structure of DeFi, decentralized finance. Okay, so after we understand the core structure of DeFi, okay, let us look at the protocol that we are talking right now. Okay, the algorithm non-stablecoin, okay, which is under the protocol of decentralized currency reserve protocol. All right, so this protocol is different to the protocol that I mentioned above. Okay, the decentralized exchange, okay, the lending borrowing, that one different. Okay, so you will only find in this protocol, okay, that there is a concept of treasury. All right, there's a concept of treasury. So this protocol, okay, mainly is to solve the problem of what? The problem of the token value. Yeah. So as you can see, okay, no matter whatever the Uniswap, okay, AVE, their token price, you will always see goes up and down. Correct. Okay, when Bitcoin increase, they also increase. Okay, when Bitcoin drop, they also drop. Okay, this is the issue. Okay, this is the problem. I'm not saying that this kind of pattern, okay, couldn't earn profit, okay, couldn't make profit. You still can earn profit from that. Okay, you can trade for futures, you can trade for spot trading, okay, you can earn money from that as well. But then it is what we say, it is quite difficult for us, for those community builders, okay, marketing leaders, for us to promote this token or this protocol if the price is going up and down. Why? Let me give you an example. Okay, if the price maybe right now, okay, it's $100. All right, so I'm doing like event. Okay, we are holding organize an event. Okay, we are promoting this token. But then, as we know, okay, we should buy token at what? At lowest price. Correct. So we can earn when the token price increase. Right. So but right now the token price is already very high. Okay, I couldn't ask my investor, hey, you don't deposit first because the token value is very high now. You wait first. Okay, wait for the token value drop. We cannot like this, correct? Yeah, if they want to make deposit right now, we couldn't tell this to them. Yeah, so this is the issue. Why? Because when they deposit at the highest price, okay, for sure, okay, the next step, the token price is going to drop. Yeah, so when the price drop, they will got stuck because they purchase at highest price, correct? They need a longer period, okay, from staking, okay, or they have to wait in order to wait for the token price return to the point that they are buying. Yeah, so this is the part that if we are a community leader, okay, it's very hard for us to promote. All right, and for another part, oppositely, okay, when the token price is dropping, it's very hard for us to promote as well. Yeah, because it's when the price is dropping, we are very hard to convince our investors to invest in this. Correct. Yeah, so this is the what we say the difficulties when the token prices goes up and down. Okay, so that in 2021 there's a protocol, yeah, called as algorithm non-stable coin, yeah, to solve this issue. Okay, so basically, okay, this concept, okay, it will use algorithm, okay, it create an algorithm and then through mechanism to control the token value in certain gap. All right, so you can see from here, okay, so this is what, okay, it will go up and down as well, but then the gap is not very big, like non-stable coin. Okay, what is non-stable coin? Ethereum, Bitcoin, Solana, XRP, these are all non-stable coin. So you will see their token price goes up and up and down. Yeah, algorithm non-stable coin, it will also go up and down, but only in certain gap. Okay, this gap is calculated by the algorithm and also the mechanism to control it in this gap. Yeah, the benefits of stable token is we don't have to worry about the token value. Okay, because we are participate in staking. All right. So staking is we earn the token volume. So if the price token, okay, if the token price goes up and down, maybe someday, okay, after we stake the token, we got the token, okay, it may be no value, correct? Yeah, sometimes the value very high, sometimes the value very low. So these are the, what you say, the things we need to worry. But in here, because of the token price is stable, we don't have to worry about that. Okay, as long as we stake, then we can promise that the token always have a value. Okay, so yeah, from here you can see, okay, how does this protocol works, okay, to stable the token. All right, basically, okay, they are using the concept of central bank or Federal Reserve, okay, like the function of issue currency, okay, currency issued, currency issuance, okay, and also the doing the regulation, okay, make adjustment, increase the interest rate, cut off the interest rate. Yeah, so basically they use this function in blockchain. Okay, they move to blockchain. Okay, fully operate by the contract by module. All right, so follow on. Yeah, this is the module. Okay, emission manager mainly is to produce the token. All right. Sorry, give me a moment. Yeah, I get my charger. Just out of battery. A moment, sorry. All right. Okay. So let's continue. Okay, for the emission module, okay, this one mainly is to what? Control the supply of the token. Okay, in order to maintain the token price in a reasonable price. Okay, why? Because as we know, okay, it's same as the currency that we are using. If the currency is oversupply, okay, for sure the value will drop, right? Because of the supply and demand. Yeah, so from here, okay, as I mentioned just now, it's not like Bitcoin. Okay, Bitcoin, they have a fixed max supply, 21 million, and it will be halving every 4 years. But here it's not like this. Okay, there's no what we say a limit supply, a max supply on this our model. So it will mint token and destroy token from time to time. So you will see the max total supply sometimes will increase, sometimes will be lesser. All right. So mainly is to stable the token price. So how does they maintain it? Okay. So as you can see from here, the token issuance is based on the supply and demand of the market. Okay, to control the token liquidity and also to control the token value. All right, and also calculate an effective price support. All right. So what is the effective price support? Okay, for example, USD. All right. So for last time, when we say after World War II, okay, USD, okay, to print USD, okay, to print the notes, you have to use your gold reserve as a support, okay, to what? To print the notes, correct? So when they want to print USD, they have to check whether their gold reserve, okay, based on the gold reserve, only they can decide to print how many notes, okay, USD. Yeah, right now, okay, last time the gold is already, what we say is already cut off. Right now it's based on the oil, okay, the bond, okay, US national bond, and also the ETF. Okay, this is the latest one, the Bitcoin. So from this as a support, okay, they can decide like how many tokens, okay, the max limit, they can print the notes, okay, they can issue the currency. Same as well. Okay, in here, okay, we are not talking about currency. In here, we are talking about the minting of the token. All right, so this price support, okay, will let you know that at this moment, okay, how many tokens you can mint, okay, or you don't have to mint any token, okay, to support the price. All right, so this is what we call price support, floor price, or backup price. Okay, so the calculation will be, okay, it will calculate your total assets, included the USDT in LP and also the USDT in treasury, okay, and divided by the total token supply. All right, so as I mentioned just now, all the data here you see that no matter the assets or the token supply is not fixed. Okay, it will goes up and down. So you will see that the floor price is also not fixed floor price. Okay, it will calculate the current floor price based on the current data. Okay, so example, okay, the USDT in LP is 70 million plus 30 million in treasury. Okay, total is 100 million assets and divided to the current total token supply, which is 10 million, right? 100 million divided 10 million tokens, which is $10. So, okay, so your $10 is your floor price, current floor price. All right, the floor price, you can also understand it as your net asset. Okay, the gap between the floor price, the net asset and the market value, okay, it can be 10 to 100 times, correct? Yeah, here is around 5 to 7 times the gap. All right, so the floor price is $10 and the current price will be $50. Okay, so this is the token where this is the price where you purchase the tokens. All right, and this is what we say the promised floor price. So this is the price that even though you say that the token is already gone, yeah, you will still receive this as your backup price. Okay, you can claim it through blockchain. For example, okay, so for example, if the project is gone and think, yeah, this is the meaning of the floor price to back up you. Okay, even though the price is lesser than $10, you will also get $10. All right, yeah, so from here, EM, okay, will know, okay, after calculate the floor price, EM will know that at this moment, should I mint token or should I destroy token? I don't have to do anything, okay, in order to supply the demand in the market. Yeah, so this is the, what we say, the token minting mechanism. All right, and this is fully operated by the smart contract itself. Okay, it's not operated by what projects or human. No. Okay, and another part, another module, the last question is we are talking about, okay, after this token is produced, okay, how do we stabilize the token price? Okay, how do we make sure that this token always have a value? All right, so this is what RBS doing. Okay, so this is also what we call the dual pool mechanism. Okay, the circulation between the dual pool to stabilize the token price. All right, so let us look at here. Right, this is the circulation between the LP pool and also treasury. Okay, so let us say, as for example, okay, when the price is going up, okay, which means that there's a lot of users, okay, purchasing the token. They go to LP to swap the token, which means that the USDT in LP is getting more and more, right? That's why the token, the price is increasing. So right now, okay, LP will need to transfer the USDT to treasury for reserve, okay, in order to balance the USDT into a pool, all right, to control the price increasing. And oppositely, okay, when the price dropping, which means that a lot of people are making withdrawals, okay, a lot of people is selling the tokens, so that the LP, the USDT in LP is getting lesser. Okay, so right now, treasury will need to transfer the USDT to the LP, all right, in order to balance the USDT in LP pool. Yeah, so this is how they control the price, okay, the cycle, right? Yeah, actually this, what we say, this concept is same as the market and also central bank. Okay, when the market, what we say, when the economy is good, okay, everyone is doing very well, okay, central bank will increase the interest rate, okay, to encourage people make deposit into the bank so that the bank, they can use the money for investment or for lending purpose, right? Yeah, and also when if the economy is not good, okay, it's bad, yeah, central bank will also decrease the interest rate, okay, so that people will willing to go to spend, go to buy things, yeah, withdraw the money out of bank. Yeah, so this the logic is same. Okay, what we say, the concept is same to RBS. Yeah, that's why just now I said this protocol mainly is they are using the function of central bank. Okay, just that they move it to blockchain. All right. Yeah. So from the right hand side, maybe you have a clearer picture, okay, of how the RBS is triggered. Okay, trigger the treasury to make adjustment. All right. So for example, when the price token value, okay, is increasing from 37 to $50. Okay, so if the RBS is not triggered, maybe the token value will be 60, 70, or 80. All right. So for right here, okay, when the price reach 50, RBS will be triggered to sell the token to the market. Okay, the token is already reserved in treasury, so it will sell the token to the market, all right, and receive USDT. Okay, so as we know, okay, when you sell the token, the price will stop increasing, correct? Yeah, so that's why here you see from 50, it will decrease to 45. All right, it will not sell a lot of tokens. Okay, it will based on the market. Okay, because if you sell too much, the price will keep on going down. So it will only sell certain amount to control the price at a certain gap. All right, so as you can see here, the price increase and decrease is not very big gap. Okay, it's not a very big gap. All right, and if the token price is dropped, okay, let's say from 46 drop until 36, okay, at this moment, RBS will be triggered as well to buy back the token. Okay, to buy back the token and go for destruction. So that you see here, yeah, after we did the action, the price token value increased to 45. Yeah, we sell at high price and also buy back the tokens at lower price. This is how we always trade for the spot. Yeah, we persist at low price, sell at the high price. Okay, the concept is almost the same. Okay, but then this part, okay, as I mentioned, okay, is already written in contract. Okay, RBS will auto stable the market value. Okay, will auto be adjust the market value. All right, to maintain the token value at a certain gap. So from here you can see, yeah, this one, this pattern, okay, is already fulfill the mission and vision of non-algorithm non-stable coin. Sorry, yeah. So this is what V3 is doing. All right. So from here we can roughly understanding. Okay. So from V3, okay, from ARK, this is how we control the bubbles. Okay, how we control, how we stable the token volume, token value, and also control the liquidity of the token supply. All right. So let us look at the structure of V1. Okay, why we want to make this comparison? Because right now in the market, there's a lot of similar projects. Okay, similar DeFi projects. They are also talking about treasury. All right. They are also sharing in this way, okay, fully decentralized. But after their program started, okay, after their project launching, okay, you check from blockchain, actually they are not. Okay, like what I showed you just now. Okay, the LP didn't lock. Okay, it's not transparent, and the project is holding the authority. And also from their structure, also you see, okay, they couldn't sustain the bubble for a very long time. Okay, let me share with you, okay, how the structure works for V1. Yeah, so as you can see from here, okay, V1 is not like totally not like V3. Okay, from the structure you can see V1, okay, is already fixed, okay, as $1 to back up you, as $1 for the floor price, for the backup price. Okay, it's not like EM just now I mentioned. Okay, EM through the calculation of the total assets and the total token supply, it will always calculate a current floor price. Okay, but not fixed. Okay, because the price, your token price will goes up and down. All right, so your floor price also will goes up and down. This is what we say reasonable. All right, but if you fix at only certain value, okay, $1, it's not reasonable. Why? Let me give you an example. Okay, if the token value increase until 1,400, right? For sure, definitely, there's people persist at maybe 1,300. All right, but if the backup price is still same $1, okay, it doesn't make any sense. Totally meaningless, because if the token value drop until $1, my asset left how much? If I staking for 10,000, okay, the token value is 1,300. Okay, if the token value drop until $1, my assets is only left $10. Yeah, so that is totally meaningless for those people who persist at higher price. Okay, if you are persist at maybe 20, $10, $30, that one is still okay. But this one is too much. The gap is too big, bro. Okay, yeah, but for V3, okay, for V3, you will see that the backup price is not $1, it will be around $300. Okay, the gap is between 5 to 7 times. Yeah, so this one is better for us, right? Because the risk is lower. Yeah, at least when we lose the money, okay, we are not losing that much, right? Yeah, so this is one of the mechanism. the floor price. And also you will see that in V1, okay, they also have the concept of treasury. But we are talking about the V1 treasury is a dead pool. Why? Because the treasury in V1, they don't have token. Okay, there's only USDT in their treasury stablecoin. They don't have the token. So they couldn't, what we say, couldn't operate the circulation between the tokens and USDT to sell off your token and buy back to stable the token price. They couldn't do that because they only have USDT. All right. So mainly their treasury, okay, making adjustment is not by the contract, okay, it's by the project itself. Okay, they can decide whenever they want to make adjustment or they don't want to. Okay, they can depend on different situations or conditions to make the decision. All right, so from here you already know that this one is considered centralized. Okay, and the mechanism is not reasonable. All right, and also the treasury will also make adjustment. Okay, usually for V1, okay, when they will trigger the treasury to make adjustment, only when the price is below $1. Okay, only below $1, so that the treasury will adjust the price back to $1. So as I mentioned just now, even though you back up for me $1, I totally lost, I nearly lost everything. Yeah, even I didn't lost everything, I also lost a lot of money. Yes, so that's why I said this mechanism doesn't make any sense. Okay, it's not protecting investor, it's not protecting users as well. So that's why you see a lot of V1 projects. Okay, I don't want to mention the project's name. Okay, you will see all their token value. Okay, after starting time, okay, the token increase very high. Yeah, after that keep dropping. Why? Because from the mechanism they couldn't sustain the volume. Okay, and if the gap is too big, okay, which means that the backup price is totally meaningless. So that's why you see they will keep on lower down the price. So that when people persist the price, okay, $1 is still able to back up them. Okay, so when you see the price is 1,400, how do you want to back up them if you already fix your backup floor price, right? Yeah, so this is what we say the structure between the V1 and also V3. Okay, from the safety part and also from the sustainability. Yeah. So why we are sharing about this? Because first thing first, we need all all our friends, okay, our leaders, they know how to check first. Okay, check in blockchain like what I showed you just now. Okay, so you know how to check already, you will know that this platform is a truly DeFi platform or what. Okay, then only we proceed to the mechanism. Okay, how the mechanism can sustain the bubbles. Yeah, so that in V3, okay, we're sharing with you the main point is in V3 structures, okay, in ARK, okay, you will see that these are all the how our mechanism works. Okay, everything is operated by different module. Okay, EM, RBS, actually there are three more. Okay, YRF, RCM, and also MCR. Okay, different module, they have different job scope. Okay, they control different part of the data. Okay, so today I'm not going to explain everything, okay, mainly about EM and RBS only. All right. Yeah, so the biggest difference, V3 and V1, V3 is decentralized, V1 is centralized. That's all. All right. Okay. So follow on, I'll be sharing with you about the marketing plan. I hope in not taking too much time. All right. Okay. So after we understand the risk, okay, the safety and the sustainability of this platform, okay, let us look at how we earn money, earn profit through this business model. Right. So for our passive income, we have two types. Okay, you can choose to stake for bond. All right. Yeah. Okay. So we can choose to stake for the bond, okay, or stake for the token. All right. So for bond staking, okay, you can choose from 30 days, okay, from 30 days to 300 to 60 days. All right. The four different duration contract. Okay, every different contract will give you different ROI from 0.7% to 1% daily. right? And this ROI is not fixed, yeah. Okay, it's just for reference because it will also based on the market supply and demand. Okay, sometimes will goes up and down. Okay, for 360 days, okay, sometimes maybe 1.1, maybe 0.9. All right, it's not fixed. So yeah, and also for the this profit, okay, it will be released every 12 hours. Okay, it will be based every 12 hours, which means that one day you will receive 2 times profits. All right. For example, if the daily profit is 1%, then maybe 0.5, 0.5. Okay, every 12 hours. All right. And for bond staking, you will receive discount as well. Okay, for from 5 to 10%. Okay, discount from the token price. All right. So which means that from the token price, if the token price discount, okay, then you will receive more token volume. All right, more token volume. And for the second staking, okay, is token staking. For token staking, okay, you can choose for flexible or fixed contract, right? For flexible, which means you can withdraw your capital after 24 hours. Okay, after 24 hours, you can choose to withdraw capital, but the profit daily ROI is slightly lower, okay, 0.6 up and down. All right. And for the fixed contracts, it's same as the bond. Okay, we have 4 types. Okay, for duration from 30 to 360, 0.7 to 1% daily. Okay, but for token staking, there will be no discount. Okay, there will be no discount. Okay, for example, the current token price is $10. Okay, for bond staking, maybe you'll receive, after discount, you'll receive maybe $8. But if you persist token staking, because there's slippage and also the AI robot, so maybe if you want to persist at $10, maybe you'll get $11 or $12. Yeah, this is for those people who always swap, always trade in the LP in DeFi, you guys will know it. Yeah, we couldn't persist at the price we want, and we couldn't sell at the price we want. Yeah, this is what we call the slippage, everything. All right. So from here you can make the difference. Okay, bond staking, okay, for sure you will receive more token. All right, you will receive more token, and through compounding, okay, I believe you guys heard of the investor from Origin or other platform, yeah, similar platform, how they earn like 100 times in a year. This is why what we call the compounding. Okay, which means that because if you didn't claim your profit, okay, it will auto compound for your passive income. So day by day, okay, maybe around 3 months, okay, 90 days, 3 months. If your capital is 10,000, all right, you will make around 30,000 tokens. Okay, from 10,000 tokens, you'll make around 30,000 tokens. Okay, which means that times included your capital times 2. Yeah, sorry, times 3. Okay, times 3. Yeah, so if you want to get back your capital, it will take around 70 days. All right. And if you are staking for 1 year, you didn't withdraw anything, okay, your APY will be around 37 times. Okay, 37 times. Okay, this we didn't include yet the if the price token increase. Okay, this is we calculate based on the same token value. All right. Yeah. So from here, we know that staking for bond is better, of course, but bond is not always available. Like I mentioned just now, okay, it will always based on the market supply and demand. So if the LP, okay, the liquidity is what we say is enough, okay, to supply the demand, okay, to supply the demand of the market, then there will be no bond staking open for the market. So by that time, we can only stake for token. All right. Yeah. Okay, follow on for our marketing bonus. Okay, the first one is the referral reward. Okay, this one is very simple. Okay, as long as you refer one person, okay, then you will be able to unlock the first level. All right, the first level, only first level. We don't have multi-level for the referral reward. Okay, and you will receive a 10% direct referral reward from their staking profit. For example, okay, let's say um you guys refer me. Okay, I'm making $1,000 from my staking profit. Then you guys will receive 10%, which is $100. Okay, but the next 12 hours, if I didn't claim my profit, okay, I keep on compounding. Then your direct referral reward will also getting more and more. Okay, maybe 101, 102. All right. Yes. And then for second reward, okay, is ranking bonus. Okay, for ranking bonus total, we have 15 level, okay, from S1 to F15. So yeah, for this part, okay, if you want to achieve higher rank, then you need to meet, okay, you need to fulfill 3 requirements. The first one is your personal holdings, which is your personal staking amount. All right, the first requirement. The second requirement is your small group shares. Okay, the shares from your small group. Okay, what is small group? Yeah, you can have a lot of networks. Okay, maybe 3 or 4, and then cut off. Okay, take off the biggest group. Okay, then the rest will be all your small group. Okay, it can be 3, 4, or 5, or 6, or even 10. Okay, so this shares, okay, this part of shares is calculated from the small group. All right, and the third requirement is your referral amount. Okay, it's your referral amount. So from here, you can see S1, your personal holding is 100, small group is 5,000, a referral amount 2%. Okay, as long as 100 staking, it will consider as a referral. All right, and then you will receive 5 to 10%, okay, from your total shares. Okay, total shares staking profit. All right, this one will calculate from your total shares, okay, 5 to 10% from their staking profit. All right, and what if your downline is same rank as you? Okay, for example, if you are one day you are maybe S5, okay, or there's a S5 below you, okay, what you will receive from here, as you can see, you will receive 2 peers on the same lineage, okay, which means you can receive 2 same rank, okay, receive 10% from their marketing bonus. All right, and what if your downline override you? For example, you are S5 and your downline is S6, right? You will also receive a 5% reward from their marketing bonus as well. All right, this is the second bonus, ranking bonus. So the third bonus is the guild contribution reward, okay, worldwide bonus. Okay, so this bonus, it will automatically release every 12 hours, okay, and it will allocate 5 to 10% of the network daily total token yield. Okay, the daily total token yield, okay, the projects, okay, will distribute 5 to 10% to the user who is S1 level or higher. All right, but who is able to get more from this bonus? It will based on your what? From here, you can see the personal holdings. Okay, if you are staking for more, then your personal coefficient is higher, and then from here you will get more bonus. All right, and another element is you will get more also if you have more new add-on small group sales. Yeah, here, new general contribution value. So if there is new contribution, okay, in these 12 hours, then you will receive more. If there's no add-on at all, you get 0. You get nothing from this bonus. All right, so this is the calculation. Okay, these are all the bonus. And last, we will look at the rules and regulation. Okay. Yeah, so this is talking about the cap limit of your marketing bonus. Okay, there's no cap limit for your passive income. Okay, there's no cap limit from your staking, only from your marketing bonus. All right, so marketing bonus is 5 times from your staking amount. For example, if you are staking for 10,000, then your marketing bonus limit will be 50,000. Okay, so if you hit the quota, you want to increase the quota, you can choose to restake. Okay, choose to restake to increase the quota. Right? This is the first part. And the second part is the burning mechanism. All right. For your passive and active income, it will take 60 days. Okay, it will take 60 days to release to you every day. All right. For example, if your profit, okay, you are having a 10,000 profit. Okay, so this 10,000, it will be divided into 60 days. Okay, every day release for you. Okay, but if you want to speed up the progress, okay, you want to release it in shorter period, okay, you can choose from 30 day to immediate release allowed. Yeah, you have 4 options. Okay, but the shorter the duration, okay, the higher the burning fee. So for 30 day, it will be 5% until immediate is 20%. All right, for example, you wish to unlock 10,000, then you need to prepare another 2,000 in your wallet, okay, for the burning fee. It's not the burning fee is not deduct from the amount, unlock amount. It's not from the 10,000. You need to prepare another amount. Okay, another 2,000 for it to burn. All right. So for this part, okay, you can prepare either USDT, okay, a token, or even Ethereum, okay, for the burning. All right. And after you unlock your profit, okay, you need to go through to the swap, okay, in order to arrive in your TP wallet or MetaMask. Yeah. Okay, so for TuberSwap, it's very simple. Okay, if you want to, if you already unlock, okay, 10K, let's say 10K tokens, 10,000 tokens, okay, then you need to prepare 10K tokens or the 10K tokens equivalent of USDT in your own wallet to active the TurboSwap. Yeah, because when you active the TurboSwap, it will detect whether you have enough asset in your own wallet. All right. So after active, okay, it will take 12 hours, okay, for the 10K tokens to arrive in your TP wallet. All right. But the tokens or USDT that you prepare in your own wallet, okay, for the TurboSwap, you don't have to wait for 12 hours. That one you can sell immediately after you active the TurboSwap. You don't have to wait. All right. Or maybe for some people, okay, if you don't have so much money, okay, so much token or USDT, you can do it separately. Okay, you can do it multiple times, maybe 1,000 each time. All right, to withdraw the 10,000. Okay, 1,000, 1,000, 1,000. Okay, so yeah, after you withdraw, okay, after it arrives to your own wallet, yeah, if you want to swap from the token to USDT, okay, there will be a selling slippage, okay, only for selling. Okay, for buying, there's no slippage. Okay, it's only for selling, there will be a 2.5% slippage. Okay, this percentage is lowest among I would say similar projects. Yeah, before us, the lowest is 3%. Right now, it's us 2.5% only. All right, when you swap your token to USDT. All right, so that's all for the marketing plan. Yeah. So finally, as conclusion, okay, for the marketing plan, you can see that actually you can earn a lot, okay, even though you didn't do marketing, okay, from only passive income, from only staking, okay, you can earn around 37 times, okay, if you compound for 1 year. All right, of course, time is your best friend. If you can wait, then you can earn more, okay, through the staking. So a lot of people, last time I shared with a lot of businessmen, okay, they are doing traditional business. They feel that this profit is very, very good for them because they are doing business. Yeah, business also cannot promise you 1 year or how many months they can earn much profit like this. Yeah, so even though you are not doing what we say, doing marketing, also you can earn a lot. But if you want to earn more, yeah, you're building community, of course, that one you can earn a lot, a lot, a lot. Yeah, because from your marketing bonus, okay, from your passive and also marketing bonus, you will receive tokens. So from tokens, you can also restaking. All right, if you choose to restaking, then of course you can earn more. But if you choose to withdraw, you claim it also, yeah, it's a very good income as well. All right, based on you. Yeah, so from this model, okay, definitely, no matter you are doing a leader or passive income investor also, yeah, you can earn a lot, a lot, a lot. Yes. All right. So that's all for tonight. Thank you very much. So if you guys have any question, we can discuss right now. You can switch on your mic and we can.
Good evening, all of you. This is Side Mr. V.